Hey, what's up, you guys? It's girl Alexandria B. Today's watch list is going to be so different. On Friday, I actually ended up taking a mental health break from the market and from being Alexandria B. Your girl just needed to be Alex. Haven't felt like being on camera. I have been binge watching Law and Order and having the time of my life. But of course, I'm still going to put out a watch list for y'all. All right. So I wanted to start off with this food for thought that I left everybody with on Friday. Let me zoom in so y'all can see. I told them last week on the swing trade watch list, and all this week I pointed out that XLC, which is the sector ETF for the communication services sector, needed to drop. The charts told us that Netflix was going to drop. We know that they had earnings this week. So now we know how to go fishing. Check the sector ETFs every week and it will help narrow your focus. So let's head over here and look at what XLC looked like on the weekly. So last week we set this trend line here, and I'll go on the daily since we see that big old drop. We set up this gorgeous trend line, and look at this inverted hammer that came right after it. Then we had this doji on Tuesday. It broke the trend line Wednesday, attempted to gap back up on Thursday, but gave us an outside bar. So I mean, this is a bearish engulfing. This bearish candle is engulfing the body of the candle before it, right? But outside bar. And then just dropped again, right? So for the XLC sector, for the communication services sector, below the low of this week, right, which was 85.03, playing right down into this range, this fair value gap that we had. So about 84.75 to 84.43. If we lose 84.43, then I do expect for us to see 83.50 next. So the communication services, it played out. Come on now, that thing played out just how we wanted it to. So I want to go to Disney because I actually ended up trading Disney on Friday. We already know the news that came out with CrowdStrike, Microsoft, and all of that, right? But again, listen, like Rose says, they're going to blame it on the news. The charts in the news set up and did what it had to do perfectly. So we see this bear flag that was here on Disney's daily. Once the news aligned with it on Friday, right? Although it did close below it on Thursday. Aligned with it on Friday, we got this trend line break here on the daily. This was beautiful. We go and we look at Netflix. Absolutely beautiful drop there as well, if we look on the weekly even, right? And then we go to Amazon, which I told y'all was my main focus based off of XLC. Amazon just this straight drop down. On Monday, dropped. It attempted to pull back up Tuesday, but rejected it. Gap down Wednesday, Thursday. It did do a little bounce here on Friday, but I don't believe in that. Safe entry is going to be below this 180 to trade down into 174 is what I expect to see next, about 174.75, because at this point the market is doing a pullback, y'all. The market is doing a pullback. So we look at XLK. All y'all got to do is just go back and travel to the watch list from last week. We absolutely expected this because of all of these dojis up here in this range. Once it rejected the open and close, because it was pretty much the same. It opened at 233.63, closed at 233.80. So once we rejected that 233 all around down to 50, right, it was game time. This thing dropped all the way down to 220. So when we're looking at XLK now, I would expect for it to pull back into the 225 or 222.35 range. We come to the daily. So back to this 222.35, which was the close of this gap there. Kind of pull back into there and then reject back down. I am expecting a trend line return. Let's pull up our averages. Oh, beautiful. Below 221, which is the 50 MA. Next up, we're looking to target, honestly, this 212.84. And in a week, in a day, XLK typically moves $4. And in a week, on average, we're looking at a move of $8.50. So 220 down to 213 is a $7 drop. That's in its weekly range. I would expect to see about 213 below 220 for XOK. Healthcare sector, man. This healthcare sector did what it had to do. And I actually have something that I want to show y'all on bar chart. So let's go ahead and head over to bar chart first. Now, this feature that I'm going to show y'all here on bar chart, you do have to have the paid version of this. I know typically I try to come in and show you all how to use the no cost resources. This one, you have to pay that $35 a month to be able to access it, all of its features, and it's absolutely worth it. So what I did is I clicked on stocks, and then I came to new recommendations under the trade signals column. So when we're here, it's going to pull up like this. I'm a swing trader. This is a swing trade watch list. So I'm going to come down straight to the long-term indicators. So I like to look at the 100-day moving average, because if it loses that 100-day average, I can only assume that you're going to the 200-day next, right? Especially on the higher time frame. So you have the tab for number of new buys, number of new holds at the 100-day moving average, and the number of new sells at the 100-day moving average. So we can see that when we're looking at long term on the higher time frame with the 100-day moving average, that they are selling positions. They're selling off more stocks that are at the 100-day than they are buying them at this current moment. And we understand that the market is doing a pullback, all right? So I'm gonna go ahead and click on the number of sales, since I understand that's the direction the market is going. And here at the top, it does have where you can switch it from intraday, daily, weekly, monthly, blah, blah. So I'm gonna go ahead and click on the weekly. And so when we're looking here at the stocks that they are currently selling off on at the 100-day moving average on the weekly time frame, and I scroll down this list, what do y'all see in common? We have Achieve Life Sciences, Acasti Pharma, Therapeutics. I can't say some of these names right. Therapeutics, Genesis, that is, it's healthcare, Immune Bio Laboratories, Iovance Biotherapeutics. Y'all see where I'm going with it? Pharmaceutical Bioscience, Biotech Corporation. Oh my goodness, they sure are selling off a lot of healthcare stocks is on this list. A majority of what's on this list of stocks that they are selling at the 100-day moving average on the weekly time frame is healthcare stocks. Interesting. Now, if we go back and let's look again, we're going to still look at the long-term indicators, and we'll go to the number of new buys there. And this is looking on the weekly time frame. So we look at the stocks that they are currently buying on the weekly at the 100 moving average. And what companies are we mostly seeing here? Financials, Capital Bank. I looked at this earlier. First Community Corp, First Financial, First Bancorp. Hand Me Financials in for savings, so on and so on. Okay, it's the financials that they're starting to buy there. So let's look at an example of that. If we look at the healthcare sector here, we can see that it attempted to break this all-time high and closed right back under it. All right, this closed at 147.87, and previously all-time high was 148.27. All right, so it broke it. Didn't stay above that. I think the healthcare sector was up there, yeah, just like 2 days with decreased range in price action. We see that. We see these candles a little bit smaller, all right? And then this doji on Friday, y'all look for the healthcare sector to go ahead and sell off this week, all right? For XLV, we are looking for it to push down to 144.38, right here where that 100-day moving average is. In this range. I know it's a lot of colors, y'all. We just quickly going through. right? It's beautiful support trend line return is playing out in front of us. So you want to just go ahead and look for below the low of last week. I'm the type to just trade it below the low of last week. I'm not trying to catch the reject, the bounce, or anything in between that. Like, just cross the low, get below last week, all right, which is 146.86, and then I'm looking to trade it down to the 144.38. So with the healthcare sector, and so let's look at AbbVie. So if we're here and we're looking at AbbVie, I mean, a very clear support level here at the 166.50 range. Let's see, I haven't charted this in a while, so let's actually go ahead and chart it. I'm talking about, I'm just gonna go through the sector ETFs and be done. Let's chart this. So I very clearly see the support level here, and I don't automatically go ahead and map out my order blocks. That is how I do it. Order blocks, demand zones, all that, whatever you want to call it. All right, I don't automatically go and mark those off. At this point, all I'm worried about is marking off the range, the supply and demand range that we are currently in. So I can see down here, this is a major support level. The institutions come in and buy this sucker up. And I know for sure that once it bounces off of 133.58, that historically it is at least going to get to 155. Every time this has bounced off of 133.58, it has at least gotten to 155. So here again, right? So that helps me to know that I want to go ahead and put a retracement level, pullback level, corrective level, whatever you want to call it, right in there. Because price is definitely going to see about this 155, 153 that I have in here. So you see it was previously resistance. This is where it broke back down at. Previous resistance that turned into support in May. All right, so I have that there, and then of course I want another level below there, so I can see that this is where this we see that this did a double top here, right? And this is where it pulled back and held right there. So I would put a level there as well. Now, I like to mark off my own ranges. Please don't forget that you could always just use the Fibonacci levels to draw that out, right? So we draw it from the low to the high. And I know I didn't put my level down here at these wicks, but that's because I wanted to catch where it touched off, or where it touched the most amount of times. So if I pull this up and I check it, look right there. My level matched up beautifully with it. This one, I will go ahead and move up to touch here at the, where the 0.5 is on the Fibonacci levels. And where I had this just about, I can understand why they're saying 172. I mean, it is Fibonacci levels, right? Because that did break above it and fell back down. Confirmation, I'm catching these highs, that high, and then this is right where that closed. So just confirmation for, did my eyes see what I needed to see? So I have my supply, my demand, the retracement levels. Now I just need my trend lines. Now I know this trend line, I cut that off, but again, I wanted to get the most touches. So if I go down on a time frame, right, and I'm looking just for more clarity, a little bit more data, this still makes sense to me. I'm getting the most touches where price like really propelled off of here, right, by having my trend lines here. So we got this move here from this 131 that propelled it all the way up to 153, and then this just broke down and consolidated beneath it down here in this buy zone. And then this gave me the move from 154 on up to 172. So I love this trend line. It's giving me like a $30 move off of this trend line at a minimum, right? So we go back to the weekly. We're looking at AbbVie here. Now I'm going to pull up my averages for just to really be able to tell. And I see that the 20 MA on the weekly is curving down. So let's see, the 20 MA is at 168.73. So that's something that I definitely want to keep in my sight for where I could enter on a lower time frame beneath the yellow. And if I'm marking it off for a moving average, I do this dashed line beneath the weekly 20 MA. To trade it down to the weekly 50 MA, which is here at 160. So we're gonna go ahead and mark these two off and then go down to our hourly time frame and see where could we potentially catch an entry. So I don't want to look at the indicator first thing first, right? I'm gonna come here, and then what I need to do is go ahead and mark off my secondary trend line. I'm in key level trend line price action girly. All right, so I don't want to go ahead and catch this. This is from Friday's price action and just consolidated there. I'm gonna keep the trend line where these lows actually are. And so what I mean by that is I got this bounce here, we touched again here, broke down a little bit, created some liquidity there. And so here, so we do need this push there. Let's see if an average gives us confluence there. And it definitely does. We have the 250 below this trend line. So I bet if I move this to catch, yeah, look at that. Let me turn this off. So I moved the average instead of breaking into those wicks, like where it was here, right? I went ahead and moved the average to catch the low of that wick. Let me just go ahead and actually catch the low, right? So when I do that, now look at the averages matched up against my trend line here. And I'm going to go ahead and move this trend line, turn it white against all these averages colors. And so look right here, I have the red is my 200 and the purple is my 100 moving averages right there at that trend line. So, which, look, on the hourly, where the 200 and 100 moving average is right where that weekly 20 MA is. So I really feel good about this, that if AbbVie moves below 168.71 and holds below there, this would be a beautiful trade down to this 160. Let's go ahead and move this to 160. You got an $8 move right there on AbbVie to swing that, which it moves in a week on average about $7.50. So this could potentially be a 2-week hold, just depending on how it moves, how the market moves and all of that. So you could buy a 2 to 4 week expiration date and could feel comfortable holding that one. Now, I do want to point out our minor trend lines that we have here. If I go to the 15-minute, let's look on the 5-minute. Honestly, it's not really a trend because it just sat here consolidating in here. So if you did want to go ahead and catch it down to the trend line, right, for like early entry, I guess we could say, below 170.75 to trade down to about 169.30. If it breaks that, the 168.71. But me, I'll be waiting for below the 168.71 because that's too much. Okay. If it breaks below here, I need to make sure that it continues to break below the trend line. And then I need to make sure it continues to break below. Just wait till it breaks below that. Okay? Just wait. Because that's an $8 move that we're trying to catch right here. So it's okay. It's okay. All right. So we broke down one of the stocks in the healthcare sector from what we saw on bar chart and looking at XLV. So now from what we also saw on bar chart with XLF, the financial sector. Let's look right here. I mean, absolutely beautiful. Beautiful! Beautiful! And I was telling y'all, just from looking, just the fact that it was breaking this all-time high from going over and then looking at JP Morgan, right? It was like, I think the financial sector is going to have to do a little 1-2-1-2 pullback. And just absolutely beautiful. Look at this. Look at this return. Oh my goodness, I'm loving it. All right. So we do have this gap that was right in here. So I'm going to go ahead and move that there. since price is traveling down to it. So we see our previous all-time high was here at $42.49. And that's, you know, where we have that level there. So I'm looking to see what does XLF do at 42.50. Will it continue to break below and reach the 42.15, or will it hold right there? Let's look at our average. So we have the daily 9 moving average is right here at 42.75. So below 42.75, we would expect to see the 42.53, but it's just a matter of will it hold it then. Will continue to break down below there. Now, it losing that daily 9 MA is sexy, right? Because it already lost it on the 4 hour. Of course, it lost it on the 1 hour, 15 minutes, so on and so on, right? So now it's, okay, on the 4 hour and below, we've already lost the 9 MA. Now will we do that on the daily? And on the weekly, the 9 MA is down here at 41.66, right? So I would expect that, but definitely if we lose the 42.15 down to the 41.66, 41.62 range, which has me going, of course, to JP Morgan, which was just like beautiful, y'all. This sucker broke above that 211. I think it did it. It just kept going straight up. Well, I know it did. I should say it like that. I know we have a lot of levels here, but we're trading these. These are what we're actively trading. So this broke that 212, and then thing almost got to our 219 level. I was like, oh my goodness. So we see right where it pulled back here on the daily. It does have lower volume, okay? I am expecting that we'll get a nice little trend line return. I would expect us to get back down to about 206. And we do have some averages there. The 20 MA is right there at 205.66. So about 206. I never trade things right down to the exact level I'm expecting because you're not going to catch me. You're not going to bounce on me, okay? I'm going to go ahead and take my profit, do what I got to do. So this would actually be a beautiful day trade below 209 to trade it down to the 205.75, 66 range. Because that's definitely within its average range for a day. It's $4.14. So we got that there, and I would love to see a bounce. Now, if we lose the 205.66, then I expect to see this 201.66 next. We lose that, I do expect to see the 109, or I'm sorry, 196.50 from there. All right, now, come on now. I'm going to need you to hold here where this previous resistance is at the 201.50, or like 201.28 to 201.50 range. That's what I need. All right. And then the last one I want to go through is the industrial sector, because this one was beautiful too, y'all. This harami right here, this bearish harami, I did go ahead and swing some stuff in the industrial sector Wednesday night into Thursday. All right, now, because that thing did what it had to do. So what I'm looking for XLI is to see, will it hold this 123? Will you hold 123? So if we go over and we'll look at Caterpillar. First, again, look, inside bar. Yeah, an inside bar. We'd do the same thing Thursday, Friday. Now, we did go ahead and be able to get out of this, like, in some profit on Thursday. And I was like, do y'all? But then this crash on Friday, it should have just been expected. Now, from looking at RSI on XLI, we'll go to XLI first. Or go back to XLI. Now, look at RSI. It's above 50. The speed is above 50, which is the yellow one. The purple is a moving average, so the 14-day moving average. And we see that it's just pulling back. It's just pulling back. I would expect that it's going to catch this, the RSI, that the price will catch up to the speed of price moving to the upside, and then continue to move on up towards the overbought, towards the 70, right? So I'm looking for XLI to hold this 123. And if we go back to Caterpillar, right, that would be a trend line return on Caterpillar. So about where this 50 MA is, the 20 MA. So anywhere between 335.32 and 338.70, right in here, for it to hold here and then bounce this little booty on back up, all right? Because they do have earnings at the end of the month on the 30th. So I love that. Hold on, we didn't look at energy. Here we go. Now, the energy sector. Now, notice how I have these ordered by my interest, from the communication services to technology, to the financials, to industrials, to the energy sector. Industrials to the energy sector. There we go. There we go. All right. These are my interests. This is how I'm looking at trading it. Now, on XLE child. All right. Now, look. This should have, so see how it broke structure right in here. And let me put this here. Broke structure right in here because it did not make a lower high. All right. And we came back down and it didn't make a lower low. It ended up making a higher low. So the character of XLE is changing. We see this. So this pullback here, I'm curious to see, will it hold this previous resistance here? So pretty much right where it's at, this 92 level, and then be able to bounce its booty back on up from there. So if XLE holds 92, I'm looking to trade that back into the 94.66 and more than likely break that range and continue to work its way back on up. All right. So if we look at, well, let's look at what price action looks like on the weekly. Absolutely just, which was previous all-time, well, until it broke above it and failed that retest, right? But our previous all-time high was the 94.71. Last week, it came to 94.51, so about 20 cents away from breaking this range and going up, all right? So I'm looking to see if we hold 92 as support, maybe anywhere from 90.68, well, I'll say $90.50 to 92. I'm looking to see if XLE will hold it as support this week and then work its way back up to break the 94.66. Now, if it gets up here to the 94.50, 94.60, 94.50 to 95 range and it rejects again, child, it's time to get shorts. It's time to get shorts, okay? Because historically, that is where you reject and give us the move down to at least $83, all right? However, because the character of the move changed, right? We got the higher low. I would expect that now we're going to make a higher high or another higher low to then go in and make a higher high. So a trade that we are already in and we got leaps on it is Oxy, all right? And look what we got here again, right? Making these higher lows now. So I would expect for us to see Oxy push into the 66.52 range, which again is in its average movement for the week. We pull this up and look how on the weekly it's just stuck right in here. So if I mark this off, and all I'm doing is just marking off the consolidation of all of these averages here at the high and down here at the low where the 20 MA was. And then let's go down to a lower time frame and see what that looks like. We'll go to the hourly. You can see how price is just stuck in here. And honestly, with a good trend line, look at these trades that you could take. Look at these trades you could have taken in this range, just simply off this trend line, off these rejects. Beautiful, beautiful. And then there, you know, you got this beautiful support trend line you could see about there, another resistance there. So this is where we see we are now. So if we were to draw out this trend line here, oh my goodness, you guys. What do we have right here? Hovering right above this hourly trend line. We'd want it like this $61.94, $62. Pull up our average. Oh, I love it. Look at that 200 moving average right there at $61.74 here on the hourly time frame. Let's go ahead and mark that off. We want to see if Oxy pulls back to about in here and holds it. Now, if it loses 61.74, you might want to go ahead and look to trading that down to 59.50. But that's what I have for you guys. I hope that y'all enjoyed this version of a watch list this week. I love y'all. Bye.